Yeah, the point what I wanted to raise is that is what we are saying here. The Luca says this is no act as a spur in innovation and marketing activities, which Luca holds as the distinguishing characteristics of business organization. So, if you are able to come up with better and attractive marketing strategy, then that is you could easily gain good customers. This is in contrast to centrally planned economy in which the state controls the market. Like for example, if it's a not a what you call capitalist economy. In a capitalist economy is what we are talking about here.
Yeah.
But if it's like what you call the socialist economy,
Communist.
the things are controlled by central.
Center.
Then the prices and all the things are different. Clear, no?
Yeah, this contrast means
Compulsion.
Compliance.
Yeah. Elements of micro environment: customer, intermediaries, interest groups, competitors, suppliers. So they are the external elements, and a firm has culture, skills, employees, and the organization itself. Clear, no? So the macro environment, the larger mega picture. Then you have inputs, materials, supply, components, money. You see, all words starts with M. We call it 5M. Materials, money, men, machinery, and minutes. 5M. Okay, minutes is actually time.
Planning and time.
Machinery, machines, skill sets, information, and ideas. Men and women, employees and contracted associates, money, available finance, material, supplies of components. So this is the input. Then output you have added value. See, it's not the goods that is output. Added value is also an output. Added value, goods, services, the knowledge, information, stakeholder satisfaction, social consequences. So these all are what you call output. This input then directly has a consequence and that resulted into consumption. So suppliers, customers, competitors, intermediaries, stakeholders, all are part of this micro environment. When you talk about the macro environment, you have political forces, economic forces, social forces, and technological forces. In the previous sessions, we talked about PESTEL. Political, economical, social, technological, and environmental. So that is exactly this one. Organization as a system. The diagram shown, this diagram, shows how an organization takes input and transforms them into outputs for consumption. Finally, a final customer, let's say we talk about yogurt. A customer goes to a shop and purchases a yogurt, let's say Laban, he wants to drink. That is his final consumption. But input is the milk, raw milk, the labor who works, the machinery in the factory who process the milk into yogurt and Laban. You understood?
Yes.
And also in that line you have stakeholders, different stakeholders. Like for example, we are talking about Laban Al-Marai, and then now we have Baladna. Baladna. So two different competitors. Also we have different suppliers, different customer groups. So a cyclical process. Those consuming the end output provide feedback which is used to adapt the input selected and the transformation of the future process. For example, this class. Now, based on your feedback, in my next batch, I will change my style of teaching. If you find something that is not good or something needs to be changed, which I will take it. You understand me? So that is this. So, elements. There are four main elements to the system. Input, which you understood now, transformational process which occur within the organization, output, and final consumption of output. Output is not necessarily the final consumption. You have to understand the difference.
Yeah.
Now, sometimes we produce, let's say, spare parts. But that spare part is then being utilized into a vehicle, and the vehicle only used by drivers. Got it? And we produce milk, but the consumption may not necessarily the milk only. It can be laban or yogurt or butter or something else. So, final consumption of output is more than output. 5 M's, as I told you. 5 M's, remember this. So, refer to the input that an organization requires in order to function. Materials. You need material for your production of goods and services. Money, obviously, funds you need. Men, human resources. Machines, technology, and the management. Skills. Each of these must be carefully employed. You got to be very careful in employing this, as it is a valuable resource which will enable the organization to meet its goals. Moulin is one another theorist. He said that organization may have radically different goals, procedures, methods of operating, style of management, systems, structure, and behavior of its staff even within the same industry. Again, I will take example of Almarai and Baladna. What is the final outcome of both? Both of them are selling milk, fresh milk, laban, yogurt, and so on. But are they same? No, they are not same. KFC and let's say another McDonald's. Almost the final outcome is same, but the way they operate is different. Clear? So, people behind every action, document written, decision made, they are human interactions. Objectives determine the nature of outputs and how they are achieved. Structure to channel and coordinate efforts. Management to direct and control efforts to pursue objectives. So, that is about that. Effective strategic management. Effective strategic management is at the core of the organization's ability to transform. See, it is not just input is converting, output is management. Now, when you call it effective strategic management, by transforming the input into output, you also manage to add values. So, and be able to offer competitive offering of value to customers. Now, when you walk into a car showroom, you buying a vehicle, simply a car with a engine, with the tires and the seats, normal output. But if you compare really, let's say you are comparing a BMW with a normal Nissan Sunny, two different setups. But bottom line is same. But they are selling the values, not the product. For the values only the extra price coming. And the satisfaction, customer happiness, and all because of this effective strategic management. And also I would bring some better example. You go to the family food center airport. Next you have McDonald's or KFC after the family food center.
McDonald's.
Let's say you go to McDonald's. Your objective is what? You just need to buy a meal. But they have arranged a play area for children.
Yes.
Are you paying extra for that? No. But the company is offering an extra value.
Yes.
Then would you be motivated to take your children or not?
Yes.
Then obviously they are increasing the sales. Understand me? So these are what we try to say, the offering extra values. Value proposition affected by relative performance and price. What you get for what you pay. Now, if you pay 2 real and if you pay 20 real, you will get 2 different products. Maybe the same item. Now, that is very typical in China. In China, you can buy any item. Let's say you want to buy a phone. You only have $10 or you have $100. They will sell to customers. They will satisfy both the customers with almost similar functions. So that is the concept that they are building, the value proposition. Market can be defined as a situation in which potential buyers and potential suppliers of goods and services come together for the purpose of exchange. What time now?
1:10.
Shall we stop?
Down. Next. Ira.